Welcome to Biz Money Insights and Strategies. My name is Vanessa. I'm a CPA and I help business owners understand their financials so that they can make better data-backed decisions with confidence. So today we're going to go over the three financial statements every business owner needs: your profit and loss statement, also known as income statement, the balance sheet, and your cash flow statements. Let's get into it. Who is this lesson for? This lesson was specifically designed for online service providers, coaches, freelancers, digital product sellers. However, the financial principles and strategies that will be covered throughout this series apply to all businesses. Why financials matter. The reason your financial statements matter is because without your financial statements, you're essentially flying blind. As a business owner, you're guessing. Without tracking your numbers, you will not be able to catch any trends, any red flags. So the benefit of tracking your financial is that when you know your numbers, it provides clarity and it provides confidence in the business decision that you're making. As a business owner, you don't have to know everything, but you need to know what matters and how to use it. By the end of these 13-week series, you're going to be pretty confident and be able to read your financials and establish a routine that will help you continue tracking your numbers going forward. Next up, we're going to go over the purpose of the core statements, right? P&L, balance sheet, and cash flow, the difference between profit and cash, how to use your report in decision making, and pull it all together in a real world example. The three statements you must know. First up, the profit and loss statement, also known as income statement. This report essentially is telling you whether or not you made any money. Next, we have the balance sheet. The balance sheet shows what you own, what the business owns, the assets, what the business owes, the liabilities, and what it's worth. The last statement is the cash flow statement, which is tracking the cash in and out of the business. Together, these three statements provide a full picture of the business. With the P&L, you get to see the profitability. With the balance sheet, you see the stability of the business. With the cash flow, you see the liquidity of the business. All three of these reports should be looked at together to get a true picture of the business financial health, essentially. So the income statement shows the income and the expense over time. For example, if you made $1,000 sales minus $600 in expenses, your net profit is $400. We get excited about sales, as it should, because sales are the starting point of the business. There's no business without sales. However, we have to be mindful of expenses, because you can make sales and then your expense come and wipe out your sales. It's important to make sales, but also important to be aware of your expenses that are eating into your profit. Next up, the balance sheet. The balance sheet is essentially just a snapshot at a point in time. It shows your assets minus your liabilities equal your equity. The best analogy for the balance sheet is to think about it as a house. The house is the asset. The house is worth about $100,000. The mortgage on the house, which is about $70,000, that's a liability. The asset minus the liability equals $30,000, which is the equity. All right. So your cash flow statement is tracking your actual cash movement. Show a profit on paper. However, if your customers have not paid, you essentially have a profit on paper, but no cash. And that's what this report is very important. So it's divided into three categories. The first category is the cash that you either used or was provided by the operating activity. This is going to be cash provided by your core business, your sales and your expenses. Then your investing activities, which are the cash that you either spend, used in investing activities. These should be your large purchases or your upgrades. If you sell any of those equipment, like a computer, that would be considered cash from investing activities if you're not in the business of selling computers. It's investing in equipment or selling those equipment. The last category is financing activity, which is cash received from owner investment or loan, or cash used when you pay down debt or if the owner takes distribution. You can see how your cash is different from your profit. In this slide, we're going to dive deeper into that concept. You need both. You need cash and profit. Profit is about the long-term health of the business. What it's showing is whether or not the business is making money on paper. Is this a viable business model? Profit is what is left after you paid all your expenses. You will find your profit on the income statement. Cash is about daily survival. You can see it on the cash flow report. Essentially, you cannot run a business without cash. If your type of business is buy now, pay later, and your customers are not paying or you're not collecting, you will have profit. However, since you're not collecting cash from your customers, you're running out of cash. As I mentioned in the previous lesson, the number one cause of bankruptcy, of business failure for small businesses is running out of cash. That is the number one. So cash management is a very important skill for every business owner to learn because it is the top reason of business failure. Both are necessary. You're in business to make money. You want to make profit because it shows that the business is viable. However, you also need the cash because cash is what keeps your light bills on. So both are essential in order to run your business. However, they're not the same. Okay, so real world breakdown. Here in your profit and loss statement, you can see sales of $1,000. We can see that there's a profit of $400. And next up, your balance sheet, you have assets of $600 minus liabilities of $200 and then equity. So now we're looking at your cash flow statement. In your operating activities, you have an increase, right? Cash provided extra $100. In investing activity, you have a negative. So you spend $200. Let's say you bought equipment for $200. Cash went down. In your financing activity, you also have a negative $50, meaning you pay down some credit card debt. So overall, your net cash flow for the month decreased by $150, even though you made a profit of $400. What is the big insight here? Even with a $400 profit, your cash is negative by $150. So what this is showing you is that profit does not equal liquidity. Specifically in businesses that are buy now, pay later, where you're not collecting cash immediately from your customers. We're going to cover that concept in more details in the cash flow lesson. That's a very important concept and is a common misconception. People assume that profit always equals cash, and it doesn't. All right. So essentially what we can see here is that all three reports are necessary for you to get a complete financial picture. What are the top three key takeaways? The number one is profit is different than cash, and you need both. Number two, review all three reports because not one report is providing you with the full story. Your profit and loss statement shows the profitability, your balance sheet shows the stability, and your cash flow showcases the liquidity. All right. So now that we've learned all of this, we have homework. What is the action step for this week? How to apply what you just learned this week. So pull your P&L, your balance sheet, and your cash flow report, and just review one number. Right? How much do you owe? Do you owe more on your balance sheet than assets? Did your cash increase or decrease? These answers are going to give you a real insight about your business. Disclaimer, this content is for educational purposes only It isn't financial, legal, or tax advice. That's it for today's lessons. I hope this provided you with more clarity and more confidence about your numbers. If this helped you, please go ahead and share with a fellow business owner. Again, my name is Vanessa, CPA and founder of Biz Money Insights and Strategies. I appreciate you for watching this lesson. We have 11 more to go. If you want to learn more, please consider subscribing, liking, sharing. I will see you in the next video. Bye.